Hello and welcome to Indianomics. My guest today is someone who is the gold standard of not just Indian banking but the Indian corporate sector. He is running the most valuable bank. He is the longest serving chief of a bank and most handsomely paid. Why not? His is the bank with no stress at a time when the economy is perhaps going through a historic amount of bad loans, default loans, and the global economy itself is almost resembling a post-Lehman period. Mr. Aditya Puri, no prizes for guessing the name, is in the news in the last few weeks simply because he has kind of jolted the banking environment by announcing a huge cut in base rates, in his lending rate. This, besides of course electrifying the market, is also a little un-Puri-like. So let's get his version from the man himself. Mr. Puri, thank you very much for joining me.
Pleasure.
The base rate cut by 35 basis was a bit of a jolt. You really want to grab the market?
No. Let's step back a bit. The base rate is calculated as a function of your cost. The cost can either be average cost or it can be marginal cost. The RBI in their circular said we encourage and advise the banks to move to marginal cost. Recognizing the RBI English, I figured this was a direction that you do it yourself or we'll tell you to do it. So we were one of the few banks that moved to marginal cost. When I review my base rate, it's a function of the marginal cost. The cost of deposits has come down. I reduced my base rate.
Okay, so you would reckon that if the system moved in April 2016 to marginal cost, yields would, lending rates would fall by about 30 basis, 35 basis?
I don't know the exact amount, but they would have to fall.
Okay.
Because our deposit rates are almost the same as everybody else.
But you could have waited for April.
No, you have to review it every quarter.
Yeah, but they did give you time to get to marginal costing by April.
Yeah.
So there is definitely another reason why you must have advanced the marginal cost calculation. It's going to give you an advantage in the market, won't it?
We are a good boy. The regulator said we did it.
Okay, what advantage will it give you in the market? How much are you estimating you will be able to make up in volume what you may have given up in margin?
See, the point is that obviously we do believe that the rest of the market will also cut. More than the advantage in the market, the reality is with the demand and supply for money, interest rates, I can tell you, will go down further even if the RBI doesn't cut the interest rate on 29. I can assure you before you go into the next year, there will be further cuts in interest rate. The fact that incidentally, like they say, collateral damage, if people don't match us, obviously enlightened self-interest would say that the corporate should come to us before they go to anybody else. But what I want to clarify is that this was not done as a predatory measure. Okay. This was done because we are a good boy and we go by what the regulator wants and what the country wants, i.e. quick transmission of interest rates so that we can have an uptick in the economy.
Okay, this is leading to several questions. One, you said cost will fall anyway, the cost of money. How much do you estimate things can go down by? Another half a percentage point?
I think so.
More?
I think so, yes.
More?
Yes.
Why don't you give me your number? What might be?
How can I give you the number? As I told you, this is elementary mathematical calculation.
Yes, that is the 35.
So,
but
if you notice, I have reduced deposit rates after the cut as well.
Yes.
So the next time I review the base rate, by definition, it'll have to be cut.
No. My point is, if you're looking ahead at the absence of demand, as well as the way inflation is trending,
if everybody moves to marginal cost, and if RBI helps as well and cut, you could look at between 50 and 75 basis points.
Before the 2015 year is out?
Before the fiscal
year is out. Okay. How much do you think this is helping volume? Are you already seeing it? Because if I were a customer buying a car or anything...
We are seeing improvements in volume.
Okay. Last year, I think the first quarter you all said 22% year-on-year growth in credit.
Yeah.
This year you will expect that it's going to be a lot better?
It should be better as the economy is picking up.
Okay. No, but you also have a price advantage. Won't that anyway mean that you will do better than last year?
Now, what if everybody reduces the rate by month end?
Okay. Okay. You were speaking about the economy.
Yeah.
What is your sense? Have things gotten a little worse in the current quarter versus the previous because of monsoons or for whatever reason?
I don't think so. I don't think so. You see, there are a lot of things that people are talking about, which is not necessarily the reality that we face on the ground. The economy is on an uptick. So let's be very clear on that. And this inflator and deflator and all this is confusing everybody. But the fundamental is that the economy is on an uptick. People's expectations of that uptick vary, and consequently so do their observations. But we continue to hold that somewhere between 7.4 and 7.6 GDP will come this year. We're also seeing a lot of government expenditure come in this quarter. And even if you take the previous quarter estimates and you bring in government expenditure, any slowdown or any perception of that would probably be misplaced.
Okay.
So we think there will be an uptick in the GDP growth rate. It may not be to the level required. And let me preempt your next question. When will private investment come in? I think we have savvy businessmen, and if they see a continued uptick in the GDP, the investment will follow. Before the delta of the investment hits the GDP, in our own mind, it's somewhere between 12 to 18 months.
Okay, actually my question was slightly different. You know, when a man with 4,000 branches in 2,500 cities cuts his rates, and when I ask him about demand, I'm also asking you whether you can see it, whether you can feel it in the bones. Are your branches telling you that things are on the mend or are at least not deteriorating?
Our branches and our figures are telling us that GDP is on an uptick.
Okay, that's very positive. So what do you make of this NPL situation? Do you think that things are not getting worse, or do you think that in several pockets they're getting worse for altogether different reasons, global reasons?
That's a lot of questions in one letter. Let me backtrack. We are looking mostly on the negative side. Now let's take the Fed rate cut. Fed rate increase. When you take the Fed rate increase, everybody is talking about increase in the interest rates and how it will affect loans. But the fact of the matter is, interest rates get changed for two reasons. One is a change in the real economy, and the other is a negative change when it's consequent to a financial shock. If it's because of a change in the real economy, there is also a positive side of the US, which is the largest industry country, doing well. And when you have that, with a lag, when people understand that, actually the risk on comes in and you get money into the emerging market. I think the issue on China is also overdone.
Okay.
If you see my old friend Stephen Roach, he has said clearly that China, even when I had gone for a Deutsche Bank conference there, has been trying to move from an investment-led growth to a consumption-led growth. And they have actually succeeded quite well. Their consumption figures are upwards of 40-odd%. And so will there be an engine of growth? No. But will their economy continue to grow without upsetting all prices all over the place? Yes. So are global factors negative to some extent? Yes. Are they positive for India? All the FIIs think so, yes, because of the commodity cycle, the fact that we've got excellent exchange reserves, we are not that dependent upon exports, and that could be an opportunity as well. If the currency devalues, we may be more competitive.
Okay.
So I do believe that with the what I said uptick in GDP, plus where we are, we are on the mend and moving forward.
That's very good to hear, but only to get it back to the NPL issue.
I'll come to
there is a problem of Chinese dumping.
Okay.
So do you think that has stressed the situation more?
Yes, in steel it has definitely stressed the situation because they are really dumping and something will have to be done. But going back to the NPA situation as well, if you lump all NPAs stroke stressed assets in one bucket, I don't think it's right. Okay. There are a lot of them that will solve themselves with the uptick in the economy and the release of government expenditure. There are a lot of those places where between the promoters and the project, you may have created unviability.
Okay.
Those will require some tough action. But those are not so large as to affect the banking system. I think the FM statement is there this morning. Those are not so large as to create a systemic risk. But we need what is going on, and if you see Dr. Rajan, he's been talking about a Chapter 11 kind of law whereby we actually turn these things around. So my own view, yes, there is strain. It is not a systemic risk, but it needs concerted action.
Again, this is not your kind of problem, but banks can, lend loans for 25 years by only giving a first initial 5-year commitment, that 525 loan. And the refinancing of that loan also comes with a clause that we can take it over if you don't service the loan properly. Do you think this clause of loan conversion into equity will be used effectively? Is it, a weapon enough in the hands of banks?
See, Lata, this is the classic case. No, this is the classic case in India. If people follow why it has been introduced with integrity, it will solve the problem.
Okay.
If people fool around and start putting the entire ballooning at the end, and yet have a situation where NPV comes out right, so the intention of the RBI is good. The end result, if properly administered, is good. But if you apply this to a fundamentally unviable project, then it's bad.
Mr. Puri, just to come back and finish your, base rate cut question, will there be a sacrifice of margins for the second half of this year?
Our margins are always within a range. So if you're asking, could there be some minor hit on the margins? Yes, 2, 3, 4 basis points possible.
That's all.
Maybe 5, I don't know. But our margin, we always say, is in the range of between 4.2 and 4.4. Is that construct intact? Absolutely.
Okay. Even after this cut, you go above 4.2. That's big.
We don't give forward guidance, but I'm saying it will be in the range.
Fair enough. Fair enough.
So we're not going out of the range.
Okay.
We are an efficiently managed bank.
Certainly. On that note, let me take a break. But when I come back, we have to discuss a product that has come from HDFC Bank, the digital piece, their chiller and their payment pieces, which can be another very big competitive force in the market. All those questions to Mr. Puri when we are back. Welcome back to Indianomics. We have been speaking with Mr. Aditya Puri, the man who recently electrified the market with a big cut in his lending rates. But Mr. Puri, the other big playground in which competition will play out will be the digital piece. The way we buy, the way we sell, and the way we take loans is becoming digital. Do you think you are prepared for the payment banks?
Let me first cover, because everybody is talking about digital, and then it means different things to different people, like the NPA problem. The digital for us is the following, that when we looked at the people that were talking about disrupting financial services, they were talking about disruption along the line of loans, payments, purchase decisions, substituting the interchange with MasterCard, as well as transactions being done digitally. So what did we do? We first looked at loans. We now give a personal loan in 10 seconds. We give an auto loan in 10 seconds. We give a credit card instantly. We give a loan against shares in 10 seconds.
This
so
Diwali, if Amazon or Flipkart were to offer us bargain products at bargain prices, HDFC can do better?
Absolutely. Now, so I told you about the loans which we do in 10 seconds. Then we saw people were having wallets.
Yes.
These wallets were prepaid wallets. Yes. So they were transferring money from us.
Yes.
So we said, why can't we have our own wallet? So we launched PayZap, which is our wallet, which actually reflects your account and is a one-click. Apple Pay is a two-click effort. Ours is a one-click effort.
If by end of this year, end of the fiscal, you have a Bharti and a Vodafone and a Idea and a Relgio, all of them offering, various kinds of payments, bank facilities on their phone, would HDFC Bank be untouched in all its, in the entire gamut of operations?
So let me come to that. Then we introduced Chiller, which is a phone-to-phone, which actually we also have the merchant network. Now, what can a payment bank do? It affects those people who are charging for these services. I'm not charging for the service today. If my product is the same as anywhere else, then people normally revert to trust.
Okay, again, just assuming this can be disruptive, and not your
will
bank
be
so much.
disruptive.
I mean, okay, I'll come with an open-ended question in a minute. For instance, if some of them, and many of them could be backed by huge PE funds, these are days when startups are getting money hand over fist. Would you say that some of them may offer more than 4% for monies deposited? Could that be a disruption? Because initially they have a lot of free money.
Yeah, they could possibly offer more than 4%, but how many people are going to give it to them? And if you see the dynamics, they can only invest in government securities. So if you say they offer more than 5%, let's say, or say they offer 5%. Firstly, it's only limited to 1 lakh.
That's right.
That's one amount. Second is, they have only to play between 5 and 7%. Right? So I hope they want to be profitable. And unless you're
sooner
implying
or later
that,
you have to be. But you said that they would be disruptive. Where do you see the disruption, and to which part of the banking system?
Depends. If people do not change their payment services like we have, and if you continue with traditional payments, and you've been charging for your remittances, and you've been charging for your check transfers, and you're not giving him the convenience, then some of those people, and that's why we went digital, because we are taking care, not only disruption from the payment banks, it's disruption from the wallets, it's disruption from the loan.coms, it's disruption from people wanting phone to phone. We've got the entire gamut, and it's backed by brand trust and at a price. So when you look at this, you can do the transaction there, you can get slightly higher there. But when you have to then take a loan and be giving you a cheaper price, that's a 5-time multiplier.
Okay.
But
do you see this being very revolutionary in terms of the numbers of people it can bring in? Can it make some real big changes in rural India, or hitherto excluded?
We have to wait and watch. The way to look at this is that India is an underpenetrated financial market. The more the merrier. So whether small banks, payment banks, but a payment bank business model really has to evolve as yet. That payments itself is not going to make you money. Nor is the deposit.
It's the value adds that will.
It's the value adds. And then we have to see how much value he can add and how much value we can add.
Okay. But then do you see the space becoming very tough, therefore, for public sector banks, especially smaller public sector banks? I mean, SBI will survive perhaps anything, and they're already in the front foot on payment bank. But would smaller public sector banks get squeezed out?
I think they'll change as well.
Okay. Okay, on that issue, do you think, what's your comment on the reforms? Will a private sector chairman and private sector CEO be able to deliver? Are you looking at it optimistically or skeptically?
I'm an optimist.
No, that apart, how are you looking at this experiment?
I'd say it's a good step in the right direction, but a lot more has to be done.
Such as?
Such as the night committee.
Okay. No, I mean anything specific.
No, see, point
you think 51%, below 51% is needed so that, you're out of so many controls?
No, we can discuss multiple issues. The point is that the CEO as well as the employees there have to be in a position to run the bank as they want. This is the beginning of giving them the authority. The day they can run it as they want, the public sector are a very competent lot as well. So the issues relating to compensation, the issues relating to board, the issues relating to hiring, the issues relating to CVC, all of this will have to be worked on.
No, because recently I interviewed Dr. Rangarajan, and I asked him, his comment on the reforms. He said, how much I went through in RBI to prod the government into bringing their stake down from 100 to below 100, so that the banks are listed. Now you have to go through the effort to bring it below 51, or there is no revolution happening. Will you go that far?
I wouldn't go that far. I would say 51 is okay. It'd be more important that you give them an environment, which is what they're trying. Bring in an independent board, make sure that CVC and some of these issues are done. We really don't need to be that revolutionary. Partly we've got to be practical. I don't think at this point in time below 51 is possible.
Okay. Speaking of which, I have to ask you about this monetary policy committee as well, since that's so much in the news. You think that's the way to go? Or do you think as some conservatives have put it, if you please, that why are you mending something that ain't broke?
No, I think Dr. Rajan himself has said that's the way to go.
That apart. He doesn't have to be right. He could have another opinion.
No, normally I match my opinion with
the
Dr.
regulator.
Rajan, yeah. but the fact of the matter is, let's look at it this way. You don't want it to become an extension of the government, because then you don't have the checks and balances, and you would probably lead to a position. Well, then having a committee with good people is probably a better way than one man's opinion. I would have had a problem if the majority in the committee were government, because then it becomes an extension. If the committee is evenly balanced, and if you have a situation where there is equal voting, then the governor is the voting, I think is a good solution. Okay.
Well, speaking of RBI, how much are you expecting RBI to cut at all? You spoke about the price of money going down by 50 to 75 basis points in this fiscal. But how much might RBI cut, you think?
See, the day RBI is comfortable with what is going on the inflation side and what is happening with the Fed and consequently the global situation, I think that's what Dr. Rajan has said, that he's looking actively at the possibility of looking, subject to data coming in line with expectations. So, Lata, I'd be better able to answer you after the FOMC committee.
You said there'll be consolidation in the payment banks. You thought 11 was too many. Where do you see your role in this, overcrowded market? Would you be buying? Would you be
that's a distinct
buying
possibility.
Another? Okay.
That's a distinct possibility.
Would it be a small bank? Would it be a payment bank?
We are in it for the shareholders.
No, I mean, what would be a natural fit?
See, if I had your Divya Drishti, then I would be fantastic.
No, I'm asking the question because I don't have a Divya Drishti, and I'm asking the person who has the vision.
At this stage, I'll be honest. Let's see how it all develops, Lata. When we look at it, payment banks have a space. They could be a phenomenal success. They could be a problem. The small banks have a space. Are both needed? Yes. Do we have to rush into it? No. Payment bank licenses are available on tap. Or if somebody gets a damn good business model, then we can add, because you must understand that the large segment of the payment bank customer base, in terms of their target, is very different from a bank's.
Yes.
But at some stage, if the cost comes down low enough, which is what we're doing, which we did when we went into semi-urban and rural India, and now we're actually going to see that we could do a consumer durable loan of 7,000 rupees or less, because our break-even on the cost has come down.
I'm asking, where you will fit, or whether...
I will fit in both if it's good for us.
Okay. No, that's because, see, SBI has put its foot into the payment bank space.
Yes.
ICICI is there with Fino.
Yeah.
Kotak at least has a financial investment in Airtel. So, I mean, therefore I was looking whether you would look for a partner. Or you would look for a target.
Both, at the right time.
Okay.
And we don't think that the valuation of payment banks is going to be going through the roof in a hurry. Okay. We do see a change. We first ring fencing our own customer base with every possible product need that they may have at a price point and at service delivery better than the competition. So whether it's payment, whether it's loans, whether it's getting accessing e-commerce at a price even better than e-commerce, whether you want to pay your taxes, your petrol pump. We are also looking at converting a lot of our merchant outfits into semi-branches. Now up to 2,000 you could collect from there. So we can look at some of these becoming. So I think it's a great time, go back to good old Dickens, it's the best of times, it's the worst of times.
All right.
Change.
But I'm glad to hear that we could be hearing some inorganic moves from you as well.
At the right time. In the fullness of time. Correct. Right. Before you start something.
Okay. Mr. Puri, thank you very much.
Pleasure.